Ashish, good to see you. Ashish? Oh, you're on mute.
Oh, hey, Daniel, are you still in California?
Hey, I am not. I just like this background so much, I took a picture of it, and now it's in my virtual screen.
Okay. Because that was is it sister's place?
It's my parents' house.
Oh, very nice.
Yeah, it's my parents' house. I just liked it a lot. Honestly, the reason I like it is because I did all my homework as a teenager right in this position. And like, it's nostalgic for me. I just remember it and think, oh, I really like that place.
You did homework?
Yeah, believe it or not, I did a lot of homework. I was what you call a workaholic.
Ah, some things don't change.
No.
Hey guys.
Hello, hey, Anita.
And congrats, Daniel. How are you feeling? I know you get that probably a bazillion questions.
Oh, I'm feeling okay about it. I have to figure out what time today I'm going to go turn in my Intel laptop. So yeah, I'm feeling good.
That's cool. I was in, where was I? I think I was in California, and I was trying to figure out like, how do I turn in my laptop? And originally they were like, oh, we could just send somebody to come pick it up. And I'm like, really? Because I was going to be out of town. But yeah, they like don't care. And then, because I left on the 15th, which was a holiday. So I was like, I turned it in like, like Friday beforehand, which is not an option. And then I thought about like the Tuesday, but then my badge wouldn't work. So I gave it to a friend to take to, to PC services. But yeah, that was probably the hardest decision that I had to make through this whole process.
Well, honestly, Ashish, I do want to get together with you and find out more about what you've done with self-directed IRAs.
Okay.
I'm gonna have to decide here in the near future how I'm moving my retirement accounts and where I'm moving it to.
Yeah, or we can also do a session for if we have a open slot.
Sure.
I thought we can do like maybe half of it on like how to get self-directed for kids under 18s, because that's a really, I wish, I knew about this, but I never really took advantage of it until last year. And now the growth is just insane.
Recording in progress.
Yeah. And then the other part is, all these folks who are recently away from Intel, right? How do you get that 401k? Because Intel really locked it down. And how do you go move it over to something else? But yeah, happy to talk. If you're feeling better, let's just have lunch.
Yeah, absolutely. Absolutely. I have 2 meetings here because I made one to be repeating so that everybody can use the same URL. But the way my sign up for the speakers works is it generates an independent meeting for them. So I might need to go over there and check to see if the speaker went into the wrong meeting. Oh wait, actually.
Well, one of
you're
us
right
is
there,
here,
aren't you?
So
hello.
I think you're good on that front.
Great.
Yeah, this was the URL that was on your invitation. So
I did put it over there, and I didn't know if you maybe had an older email address. Everything that could go wrong has gone wrong before in the past.
Well, that's required, right? That's
Murphy's Law, or Murphy's Law about the future.
That's standard, especially in tech companies.
I didn't get it. Oh, go ahead.
Bob?
So the meeting didn't actually become recurring for me. I got an error when I tried to add it to the calendar. So I only have today's, and I got the URL, and that's great. But beyond that, nothing. I don't know if it's a personal problem or if everybody saw it.
That's a good question for the group here.
I had the same issue. I think it might be with Google Calendar.
Yeah.
Okay, was it from the Zoom registration page going over to the Google Calendar?
Yeah, I think that was the problem.
All right, well, I'll continue to send emails out each week too.
Thank you.
Cool.
Yeah, I've been surprised with how many people have told me they have problems with Zoom, or Zoom has given them problems. I would think that Zoom would be pretty polished by now. All right, we're going to wait a few more minutes to let people join, and we'll kick this off. Today we have with us the good folks from InVound, and they are a brand new or fairly new real estate crowdfunding platform. And I see Levi is here. Good to see you, Levi. We're waiting for some people to join. So both Levi and Millie are from InVound. And you're both on mute.
I'm muted, but since I know we're all going to be good friends here for a while, it's actually pronounced Levy.
Oh, Levy, I'm sorry. Yes, my son is Levi. You're Levy. All right. So we're going to wait a few more minutes. While we're waiting here, does anybody have any topics that they would like to hear more about? Ashish has proposed bringing in a topic on how to move your 401k outside of Intel. Are you going to sign up for that slot, or?
Yeah, I can sign up.
Everyone loved your last talk. Very popular.
Yeah, totally. I can do like if you're still employed at Intel, right, there's no chance. But the Roth, however, there, I've been doing it actively and that works.
Okay.
But for you guys, you can do whatever you want.
All right.
But yeah, I'll sign up.
We're going to wait for a few more people to come in here. We've got almost 100 people registered, so hopefully we'll get a few more in before we get started. And for those of you who didn't get my email yesterday, this is my last official day at Intel. So I am, as of Monday, not an Intel employee anymore, and I will miss all you guys. I turned my computer in this afternoon, and make sure you don't write me at my Intel email address from then on. All right. So for those of you who are new, and I don't think we have any new people here so far, but this is a club that is dedicated to empowering you to make better real estate investment decisions. We have a great speaker in every Friday. And this week we have Levy from InVound and Millie as well. And thank you for coming to the group, and let's kick it off in about 1 minute.
Daniel, is that congratulations in order, or what should we? What do you say?
Oh, you can just wish me luck.
Okay.
Congratulations is fine, I guess. So while we're waiting here, does anybody have a real estate topic they want to hear about in the future? All right, any recommendations on resources?
I have a question. Can you hear me?
Yeah, yes, we can.
I want to know more, and I don't know if we've covered this, hard money lending. I feel like at this point, this is my only option to get into my third property. I'm just a small investor right now, but hard money lending is what I'm hearing for rehabs. I know a guy who's just flipped a tremendous amount of properties, always using hard money lending, so you're only paying the interest. But I'm pretty nervous about it because I'm borrowing somebody else's money. I just want to understand all the risks and the best way to do it. Sound reasonable?
Absolutely. And I will point you towards a couple of, we do have, I think, 2 or 3 hard money lender speakers who have spoke before in the past. All the videos, actually, I should make an announcement about the videos too. All of the videos that we have recorded at Intel are going to remain on the Intel network until they shut down my SharePoint, I guess. I've added a few other people as administrators there, so hopefully that won't happen. I'm also going to be moving all the videos over to YouTube and to Rumble and to our new webpage for our club, where our calendar will also be posted, alternativeinvestingclub.com. So you'll still have access to all those videos. I know a couple of people out there have reached out and said, where are we going to find the videos in the future? Are they disappearing? Nope, they're going to be on YouTube, Rumble, and alternativeinvestingclub.com. All right, with that, Levy, I'll hand it over to you.
Thank you so much, Daniel. Really pleasure to be here. I actually, of course, well, everyone's used Intel computers or Intel chips in Intel, but I was a data scientist for large corporations, and we were doing machine learning on very, very large amounts of data. And some of your chips really helped me out. So I'm grateful to you guys, and that you guys actually, I know you had some as well. There was some at Intel. There was resources offered for free to data scientists and teams of data scientists, other companies like us, to help us kind of get going on some of your technology. So that was also appreciated back then. Thank you so much for having me. I'm grateful to be here. I'm no longer working for corporate America. I now have my startup called InVound. I also got the real estate bug, and also one of the things I wanted to be able to do was to help everyone get into real estate. And I think, Daniel, you and I kind of, we kind of share a similar passion here, which is, you know, the ability to kind of, real estate's a really an asset class, one of the few asset classes where you can really get cash flowing assets without a tremendous amount of day-to-day work on it. And it's also something which helps people because everyone needs a place to live. And if you are able to do these things right, you're actually able to help the world by actually creating a good place for people to live and bring up their family, etc. And at the same time, bring yourself cash flow without day-to-day work. You're really kind of, it's a win-win, I think. So I wanted to kind of help more and more people get into real estate and recognize that the way it was working previously or currently even didn't really help either the people who are living in the properties or the people who own the properties. And it seemed like the smaller people always were getting hurt. So we created InVound to be able to level the playing field. It's evolved since then. And today I want to talk about is regulation, crowdfunding, and how that really relates to real estate and all kinds of cash flowing assets. So I'm going to share my screen if that's okay.
Yep, that's fine. Also, I would love to hear a little bit about what the process is like in order to register your crowdfunding platform with the SEC, and just some of the labor that goes into that, just so people appreciate what it takes to go to bring up a site like this.
Yeah, absolutely. Very happy to do that. Should I start there, or should I do that when we're done?
Sure, whatever works for you.
Well, so let's when I get to the bit which talks about what a crowdfunding portal is, then I'll go through that. So I'll just integrate it, if you like, into the presentation. Okay. Does that sound?
And if anybody in the group here has questions, feel free to put them in the chat. I will gather them up, and Levy, I will judiciously interrupt you and ask those questions, unless you want me to hold them all to the end.
No. Okay. That's as anyone would like to ask questions, there, feel free to. So this is our team here. As you can see, myself, Millie, Chief Growth Officer, CTO, engineering, and then obviously legal. And what people might not know about Millie is that she also is a lawyer, an international lawyer. So she's got a legal background as well. So we kind of got a lot of legal heft, if you like. So a lot of people don't realize about real estate is that when you're investing in real estate, if you're buying your own property, like a lot of us do, I also buy small, multifamilies, etc. Nothing major, nothing big. But if you're investing in someone else's deal, what you're probably doing is buying a security. So so we talk about the Securities and Exchange Commission. It's really important to understand that the reason why Securities and Exchange Commission kind of kicks in here is because whenever you're investing in a deal, in somebody else's deal, even if it's your friend's deal, unless you're working, you're actually buying a security. And a security is defined by something called the Howey test. And the Howey test says that if you're investing money in a common enterprise, where the expectation of profit is going to come about as a result of the efforts of other people, not your own effort. That's the definition of a limited partner, right? You got somebody, you're not going to work in the deal. You're not showing up and with your hammer and nail. You're not necessarily kind of opening bank accounts or, filing tax returns, etc. You're just expecting that you're going to get money back. Then what you've purchased at that point is a security. Now, the rule is that whenever you are selling securities, those securities need to be registered with the Securities and Exchange Commission. That's just the rule. If you're selling securities, you need to register them first before you sell them with the Securities and Exchange Commission. Now, to every rule, there are exceptions to the rule, and there are a number of exceptions to that rule. And if if you fit in to those exceptions, then you don't have to register them with the Securities and Exchange Commission. So one of the most well-known exceptions is something called the 506B exception, which it basically says that if you want to sell securities to your friends and your family, you don't need to register them. And that's 506B. It's called private placement. I'm just giving them to my buddy. We know each other for years. If I lose his money, I have to look him in the eye. I see him on a regular basis. We hang out on weekends or whatever. You know, you're going to be more judicious about losing your friend's money than losing the money of a total stranger. And therefore, you're going to feel somewhat more obligated. And also your friend knows you. So he understands the risks a little bit better. So that's a 506B. The idea is that these are people you know and you've got a pre-existing relationship with. If you want to sell them securities, if you want to sell them securities, you do not need to go to the Securities and Exchange Commission to do it. But let's talk about a little bit before we get into all that details of the securities and how to get around not having to register. Let's talk about crowdfunding a little bit, because the truth is, anytime you're raising money from more than one source, it's really considered crowdfunding. So if you're raising money for charity and you go around your church, you're really crowdfunding that money. Now, crowdfunding took on a whole new meaning because of the internet, because people now can use websites to kind of reach thousands of people. But crowdfunding is not new. If you think about the stock market, was crowdfunding. That was the beginning of all crowdfunding. You know, you wanted to go and get money, raise money for your company. You did an IPO, you went to the crowd and you raised money. That was the initial crowdfunding. Sorry? So today we have other things like Kickstarter. Kickstarter, you know, you got a little project and you want to offer people, you know, first dibs on the product, or you want to send them a t-shirt, then, you know, you can go on Kickstarter and people will kind of give money. What their expectation is in return is not profit. The expectation is either, you know, they'll get their product first or they'll get some other kind of benefit. Lending Club was a way in which people could actually lend to each other. So it was like peer-to-peer lending. Again, that wasn't really securities. You're lending to another person, but it's also from the crowd. You don't necessarily know that person, and maybe more than one or two people can lend you money. So that's also crowdfunding, like, has a pretty long and storied history. Now we're going to go through, we spoke about 506B, and when we get to Reg CF, I'm going to talk about what a funding portal is. But 506B, again, that's an exemption you can use where, you know, it's private placement. It's to your friends and family. You've got a pre-existing relationship with them. 506C is another exemption which you can use, which it says that you can raise money from just the general public. So that's called general solicitation, which means that you can actually go and solicit from anybody, but you have to make sure whoever invests is accredited. Now, accredited means that they either have an income of $200,000 or more if they're single, $300,000 or more if they're married, between them and their spouse, or have a net worth outside of their primary residence of $1 million. So some people they own a home and their house is worth $800,000 because it's a nice big home and they own most of it, but that doesn't count towards your net worth in order to be considered accredited. So in 506C says that only accredited investors can invest, and you can do general solicitation. You have to think about this is like that the more you're going to try and offer your securities to more people, the more restrictive it's going to be, or the more scrutiny, the better word to it, the more scrutiny you're going to have to subject yourself to. So if it's just to your friends and family, not that much scrutiny. 506C, now you want to go out there and offer it to everyone. Well, there's more scrutiny or more restrictions, either more scrutiny or more restrictions. Here, the restriction is only to accredited investors. Reg CF, that's the portal which InVound is. We do 506Cs as well, but what makes us really unique is that we enable Reg CF. So Reg CF, we're a funding portal, and a funding portal allows people to raise money from the general public, even if they're non-accredited, but it has to be done through a funding portal. Funding portal is a legal entity registered with the SEC and a member of FINRA, and our obligation as a funding portal is to just make sure that there is as little fraud as possible that can get through. So actually one of the names of the laws is that, you know, which created Reg CF was to do with ensuring that fraud doesn't happen. So our obligation is to kind of scrutinize the offerings on the platform to make sure that investors are protected somewhat from fraud. So how do we become a funding portal? Well, you have to the first step is you register with the SEC. That's a relatively straightforward process. SEC doesn't actually do anything. All you do is you go and you file this form with the SEC, which says you are now registering as a funding portal. Now, anyone can do that. You want to start a company and register as a funding portal, you can go to the SEC today, file that form, and you're now a registered funding portal with the SEC. The only thing is that you can't do anything as a registered funding portal if at that point you can't be in business. In order to get in business, you have to become a member of FINRA. And that's the challenging part. It took us over a year to get that. And it shouldn't have taken that long. Often it takes shorter than that. But it took us about a year, or just over a year, because we were trying to do something a little bit more revolutionary in the beginning. And the SEC, we got all the way up to very high levels in the SEC, and the SEC were not that keen on what we were initially trying to do. Well, just kind of, if it's interesting to you, what we were trying to do initially was we were trying to allow homeowners to actually sell pieces of their own home equity to just the general public. And the SEC kind of felt that was a little bit challenging for them to get their head around, you know. But you can still do that, by the way, on our platform. We actually recently got an inquiry about that. But you have to put your home into an LLC. If you put your home into an LLC and you want to sell some of your home equity to the crowd, you can do that, and we will allow you to do that on our platform. But we were looking to allow people to do that, even if their house wasn't in an LLC. We'll put that aside for the moment. It took us about a year, and there's quite a bit of legal fees you also have to pay, because usually you've got a lawyer who's helping you through with it. There's a lot of legal documents that you need. You need a lot of education. You have to have education on your platform. You have to have procedures as well, which you follow in order to make sure that you're compliant. There's all kinds of things that you need to show. And also you need to have a platform. That FINRA won't give you membership unless you have a platform which actually works. So at the final interview, if you like, to get registration, or to get membership with FINRA, you need to actually demonstrate that your platform is working. Now, platforms are really expensive to build. So part of that was that we had to build this platform and then prove that it worked. And not that just that it worked, but also that it had all the bells and whistles needed to be compliant. So there's a bunch of different things which are necessary to be compliant, which have to be built into the platform. So in order to be able to kind of get approved as a funding portal, you need to go through this process of registering with the SEC and then becoming a member of FINRA. And becoming a member of FINRA requires that you have a platform which actually works and that you can prove is actually compliant to the letter of the laws of both the laws of the SEC, and then FINRA has its own rules. So there's probably 7 or 8 different rules of FINRA, and every single one of those rules of FINRA also has like sub rules to them. So did that answer your question, Daniel? Yeah, so that's what we did to become a funding portal. But not only that, after the first year in business, we're now being audited, if you like, by FINRA to make sure that in our first year of business, did we do everything right? And that's a pretty arduous process. So they asked for a lot of documents as they audit us, as you can imagine. And then you give them all the documents, you think that's done, then you have an interview with them, and then post-interview, they send you another 7 or 8 page letter asking for another whole bunch of documents. You know, that's just the way this works, and that's what you subject yourself to if you want to become a funding portal, which is why anyone who raises on our platform, we subject them to quite a bit of scrutiny too, because later FINRA is going to come to us and ask us and make sure that we actually did our job. And so that's what we are. We're a funding portal, but it enables people to raise money from anyone, including non-accredited investors. So non-accredited investors can show up and they can get in on deals which otherwise may have only been available to either accredited investors or to institutions. The other thing you have is a Reg A platform. Well, we also can do. So we do 506Cs. We've actually got a 506C coming up pretty soon. Someone just signed up to just do a 506C. See, the technology is kind of agnostic. So you could actually do a 506B on our platform as well. I don't see a reason why you would want to, though. But if you've got a 506C and you want to get it out there and you want to automate it, but you want to just make sure they're accredited, we have that built into the platform. You could do a Reg CF and you can do a Reg A. So if you went to Reg A, is this thing that you can actually go to the SEC, and the SEC this time actually will scrutinize your deal. And if they approve it, then you can now raise money from just the general public as well, up to $75 million. So that's a Reg A. Again, though, you'll need some kind of technology provider to enable your Reg A. We provide that technology, right? But you don't need any legal or regulatory structure from us for that. So this is just setting the stage, giving you some kind of education about like the different exemptions that people will need to use if they want to raise money from the public and how they would do it. Do you have any questions about this so far?
I have a question.
Yeah.
How much money would be like a minimum amount if you wanted to go this route? Let's say you had a couple of short-term rentals or one short-term rental. Would you want to go this route for a single house, or is it really for larger real estate deployments?
It depends. It depends who you're raising the money from, really. If you already have your buddies who are going to put the money in with you, then you just do a 506B. It's just like it's your friends. Mm-hmm. But if you wanted to go around to people well, you'd have to ask an attorney if your people in Intel, for example, were they a pre-existing relationship or not. I don't know whether it would be or not. But if you wanted to make sure that you wouldn't come under any trouble for that, then and you wanted to say, hey, all my buddies in Intel and their buddies, to be able to invest alongside me, then you probably want to look at a Reg CF. So it just depends who your potential investors are. If your potential investors are people who you don't have a pre-existing relationship with, and you don't want to make sure that they are accredited, you don't want, so if you wanted to put it up on your Facebook page, for example, with all your, and you didn't want, then you would probably want to do a Reg CF. So it really doesn't, it's not the amount which is really pertinent here. What's really pertinent is who you're raising the money from and how you're raising that money. So if you wanted to only raise $100,000 on InVound, we would definitely work with you on that. So it's not really about the amount of money. It's to do with who you're raising from.
Brooke has a question. We've had a couple of questions here, actually. Top one is sheesh. Can anyone post a deal on your platform, and how does InVound vet deals? I bet we're getting to that, right?
Yeah, so anyone can post a deal on the platform. Anyone can. But that doesn't mean that we're going to approve it and allow you to kind of go live with it. You have to go through a very significant background check, and we will do a due diligence on the deal itself. What we won't do is we won't vouch for the deal. We're not allowed to. So we're not investment advisors. So we're not, when a deal goes up on InVound, we're not saying that this is a good deal, that you're going to make money off this deal. What we are saying is we've done our due diligence and we feel confident that there's no fraud going on here. But we're not saying that this is, wow, you're going to make a lot of money on this deal. We're not saying that at all. We expect that the investors look at it and we put all the documentation available about the deal up there. We make sure that's all available. So all the pro forma, the Form C, all the disclosures, they're all there. And then you have to then make a decision whether you want to invest in it or not. The other thing you can do on the platform is ask questions from the sponsor. So there's like at the bottom of the page, there's a little chat feature, if you like, where you can ask questions and the sponsor's supposed to answer. If they don't answer pretty quickly, then you probably know that the guy doesn't really care that much about his investors. They probably don't invest. But if, usually the guys who are on the platform, you're going to ask a question, they're going to answer. So it's up to you to do your due diligence to figure out whether this investment opportunity fits in with your own investment thesis or not. But we don't vouch for the deal itself in terms of the quality of the investment opportunity.
So Glenn has a follow-up question to that. And he's asking, what is your exposure in case there is fraud on the system? What's your process for handling that?
If there's fraud and we didn't do our due diligence properly, yeah, the exposure goes all the way up to me personally. I personally could be liable, as the CEO of the company. I could not stand behind the wall of, well, I was just a CEO. This is the company which is liable. No, I personally become liable for that. And that's the part of the deal of running a funding portal. unlike some other, CEOs of companies who, the company gets sued and the company gets convicted and the CEO is just as if the CEO is fine. No, in this kind of situation, I have personal responsibility to ensure that no fraud takes place on the platform. So I'm pretty damn careful about it, right? To make sure that we do the due diligence possible and that all the disclosures are available. Now, sometimes people lose money in investments, and therefore there are disclosures everywhere saying you could lose all of your money on this. So it's very, very clear. Someone actually told me, I think you've overdone it. I took that as a compliment. If someone says that that on our platform we have been too careful about letting people know they could lose their money, I'll take that as a compliment. Because you should know that these alternative investments are highly speculative. That's the word used by the SEC and FINRA. They consider any alternative investment to be highly speculative. Now you might say, well, it's real estate. What could go wrong? Well, you have to understand that usually if you're investing in real estate in one of these deals, you're getting pref equity, which means that you're not just behind the bank, you're behind any other mezzanine financing as well. So you're third in line at best if something goes wrong to get your capital. Usually you'll be wiped out if something goes wrong. I say understand that you also, if it goes well, you'll make a lot of money too. But if something goes wrong, the bank's getting paid first. Any secondary financing will get paid second. If anything's left over, you'll get something. Mostly there's nothing left over. So it's highly speculative and you can lose a lot of money in it. And we make sure that everyone understands that too. And if you're investing and you've seen those disclosures and you lose money, we're not on the hook. We're not responsible for that. If there was a Ponzi scheme going on, for example, or we allowed some kind of fraudster through, then we're on the hook.
Hey, Levy, I'm going to push back a little bit on you there and say that most investors or most general partners will disclose what their loan to value ratios are, and investors should really be looking at those to determine, how much debt will always get paid off first, but then the pref equity is first in line when equity is paid off, and a lot of that really depends on that loan to value ratio and how much they're actually leveraged. And so it's important for investors to look at that. If you've got somebody who's 80% leverage, well, that means 80% of the deal has to be paid back before the pref equity gets paid. But if you're 60% leveraged or you have a lower leverage, there's a better chance.
That's absolutely true. So that's why you have to look at the deal. That's exactly what I'm saying. It's your obligation to look at the deal. But what I'm saying is you're absolutely right about that. There is a possibility, though, even in real estate, that you could lose all of your money. That's what I'm saying. And if the deal is very highly leveraged and it goes wrong, there's much more likelihood that you're going to lose all of your money. It's less leveraged, then it's more likely you get back some of your money. But it's an investment, right? We've all been in the stock market, especially in the last few years. And, I invested in some tech companies back in 2020, 2021, and I lost 95% of my value in them. It's just, these things happen. Our job is to make sure, though, that you are aware of the risks. Are there any other questions before we move on, or?
Let's see, we have one question. Do investors have to be US citizens?
No. Can be anyone.
Okay. And you may get to this, but Anita has a question about what's the charge to the sponsor to post a deal, and will your site also help them with, I think it's HV, have their PPMs?
Yeah, we'll get to that. Yeah, absolutely. So I just want to understand how many people here are sponsors versus investors on the just.
Yeah, if you're a investor, put 1. If you are a sponsor, put 2 into the chat. Most of the people here are going to be investors. Oh, somebody put a 3. I guess that Glenn is both.
Okay, so you said 1 is an investor and 2 is a sponsor?
Yes. So mostly investors here.
Okay.
We're all busy people at Intel.
Yeah. That's what I figured. But you never know. I've met tons of sponsors who've been part-time sponsors. Those people are technically mostly their fundraisers, right? They're sponsors. They're mostly their people who are fundraisers. Am I right? If you're rather than chasing the deal itself.
We've got a few in here that are sponsors. Anita, Glenn, myself, Gene.
what is a sponsor? Someone's asking. A sponsor is someone who manages the deal, like the GP, gets it under contract. Sometimes it's people who are working in the deal by helping to raise some of the money and maybe looking over the documents and doing some other stuff, right? Am I right there?
Yeah, I usually say the sponsor. So you've got the general partnership, and they're all the people that are working on the deal. And the sponsor tends to be the manager of the general partners. That's one way of looking at it, but it's not a legal term, right? It's an industry term. So it's usually one of the people that's responsible for doing work on the project.
Yeah, it's used interchangeably. And when I first got into this, I found that it was really confusing. What's the difference between a sponsor and a GP? And then there's another term which they use. I can't remember. There's a third term they use, syndicator. So now what's the difference between a syndicator, a sponsor, and a GP? I'm like, it's so confusing. They really all mean the same thing, right? That the people who are working on the deal, raising the money, etc. Okay, so
all right, no other questions.
All right, excellent. So who are the people who do these crowdfunding platforms? Who are the other players in the space? So you have Realty Mogul, who you may have heard of. Fundrise is another name you may have heard of. These are what you would call 506C and Reg A platforms. So when I say 506C, they're mostly only to accredited investors. They do have some offerings to non-accredited investors, but those are usually Reg A's, which are run by the platform itself. So what that means is the platform went to the SEC and said, can I raise a fund from non-accredited investors? And they told the SEC what they were doing, and then they got permission to raise from non-accredited investors through the Reg A. But it's not deal by deal, right? So you're not looking at each individual deal. You're investing in their fund, which then they take that money and they invest it deal by deal. So that's how that works. There's another company, I didn't put the name here because I think what they're doing may be questionable. They're using crypto in order to fractionalize real estate. And then they're saying, therefore, because it's crypto, therefore it's not a security. I'm not even sure they're still doing that. Once upon a time, that was a thing. If you tokenize, therefore it's not a security, and it brings instant liquidity, according to them. It didn't really do either of those things. You have debt platforms like Ground Floor. I'm not really sure what their regulatory framework is. I'm a bit miffed about that. And then you have people like us, and we're a Reg CF and a 506C. There's at least one other which does real estate as a Reg CF, but there are many others which do things like startups. So you may have heard of Republic, you may have heard of WeFunder or Start Engine. There's this, anyone watch Shark Tank? There's a guy in Shark Tank called Mr. Wonderful, or Kevin O'Leary, and he's the face of this company called Start Engine. Start Engine is it's a funding portal, also registered with the SEC and a member of FINRA, mostly for startups. So what we are as a Reg CF portal is we're focused on real estate and other cash flowing assets. So other assets which, you're expecting a return on. And when I mean a return, I mean relatively short-term return. So either in terms of cash flow or in terms of something which has a maturity within a year or two. So an example of that would be, we're about to work with we just started, actually, we just signed a deal this week with a company which is a distillery. So they're selling whiskey, and they're raising money on the platform for, basically more whiskey, creating more whiskey. So you're buying into that, and then they sell the whiskey for a profit, and then you make money off that. So those kind of assets are also starting to kind of show up on InVound. So InVound stands for invest and own, but you can see the bread and butter, you can see the little proof on it. The bread and butter is real estate. So
it's interesting. We had a person come in and talk about how they were doing crowdfunding for vineyards and for buying and purchasing and operating vineyards. Made for a very interesting talk, and it sounds like that would be someone who could use your platform.
Yeah, were they only for accredited investors at that time?
They were. I don't remember whether they were 506B or C. I don't remember.
Yeah, because we actually have a vineyard which we are talking to about raising on the platform.
Oh, is it the Hubbards?
Yeah, that's right. Yeah.
Okay, then they were here about 2 years ago.
Oh, really? Yeah.
Yeah.
So we've been talking to them. Actually, they plan. Millie, do you remember when they're planning to raise?
I thought potentially June of this year.
Yeah, so that later on this year, they're planning on doing a Reg CF.
Very cool.
Yeah, they're nice people, very nice people.
Yeah, they
So,
are. Just a disclosure, I actually am on a couple of syndication deals with them.
oh, really?
Yeah.
Okay, so then, yeah, hopefully, you mentioned that we know each other, and hopefully, I look
Yep.
forward to kind of doing deals together. So, so the legal definition of Reg CF, I told you, it means the capital raising online while deterring fraud and unethical non-disclosure act of 2012. It's kind of a mouthful, but that's the official name of it. You see it while deterring fraud and unethical non-disclosure. Unethical non-disclosure is people just don't disclose. They don't tell you. And if anyone's been hit up on LinkedIn to invest in something or other, and they're told, oh, 60 IRR or 60% return, and they don't disclose what the risks are. So this is to kind of avoid that, make sure that there's no fraud and that full disclosure is made upon what the risks are. What's ethical non-disclosure? I mean, unethical non-disclosure, not rather than ethical non-disclosure. It's if you're non-disclosing, it's unethical to not disclose, right? If you're not disclosing the risks, then it's unethical. The ethical thing to do is to make sure you're disclosing all the risks associated with any particular investment opportunity. If someone's not fully disclosing the risks, then you've got to ask yourself the question, why are they not disclosing it? One of the ways in which you can cheat people is by not telling them that this is a risky endeavor, right? You make as if this is, oh, we're targeting 120 IRR or whatever, making it up. But the point is that they're not telling you that, well, what could go wrong? And in any kind of investment, something could go wrong. Or it's also known as the crowdfunding act or Reg CF. Sorry, it was a joke. All right. So the benefits of crowdfunding, why someone would want to crowdfund, is that they basically set the terms, can raise from anyone, and we offer a full support and solution for them. Right. So we've got all the technology, all the legal documents, everything you need in order to kind of get your raise going. And for a lot of people who are doing 506Cs, they're doing advertising anyway. If you're doing advertising, why would you tell, 83% of your people that they shouldn't, that they can't invest alongside you? So if you do a Reg CF and a 506C together, for example, then you can have anyone invest, literally anyone. So I think I went through this about what a funding portal is already. But it's important to understand what we're not allowed to do. Okay, so we're not doing any investment advice. I kind of went through that. We can't advise you what or recommend any offerings to you. We actually cannot solicit people to buy securities. So we can't actually go ahead and say, hey, please buy this offering, please buy that offering, which is why I'm not showing you any of the offerings today of what we have up. You can go and check that for yourself and make a decision. Currently, we have one up. We had two, but the other one closed. We're not allowed to compensate promoters also to do that. And we're not allowed to, this is really important, we're not allowed to actually hold investors' money. So if you're investing through InVound, what you're actually doing, and this is really important to understand because not a lot of investors understand this. When you invest through InVound, so if you've got a deal and you really like the deal and you invest through InVound, your money now gets held in a third-party escrow account. So actually, we are not allowed to hold any investor money. It goes to a third-party escrow account, which is managed on behalf of you and the sponsor. And at any moment, you can decide, I want out of that deal. And you can request a refund of that investment. And then the refund will start being processed straight away. Now, sometimes that refund can take time if you want to, depending how you invested, how you sent the money in. But the point is that the second you want out of the deal, you can say you want out of the deal up to 40 hours before the deal closes. So, but we don't hold any of the money for you. So it's not like we can go and do what Bankman-Fried did. He's holding everyone's money. He went off and basically bought all kinds of stuff and spent the money. We can't do that. We don't have any access to investor money whatsoever by law. And we also Go ahead.
Brian is asking, is it a formal third party, like a qualified intermediary, like a
Yes, it is.
1031 is?
It's exactly. So it's actually our third party is actually a company called it's a broker dealer called North Capital. They hold the escrow account, and then that money is in a separate bank account. So you actually have a bank, which holds the actual money, so it gets wired into a bank, and those bank accounts are managed by a broker dealer, which is a non-interested party. It doesn't have that. We have nothing to do with it. What else we got here? And the funding portal, so what we require to do, we have to educational materials I mentioned, take measures to reduce fraud, make available information about the issuer and the offering, and we facilitate, this is really important word, we facilitate the offering of and the sale of crowdfunding securities. We are not the sponsor, we're not the issuer, we're only the facilitation of it. So we'll help you to make sure that you make that investment. So if you're using your IRA or your 401k to invest, very often, if there's something which is needed along that, you'll have conversations with us because we'll tell you what documents you'll need. Very often we're communicating with your IRA provider because they're asking us questions, but we can't answer any questions about the actual security being offered, about the deal itself. So, so we've got, this is less interesting, I guess the next bit here is less interesting to people who are not sponsors, but really it's pretty straightforward process to sign up and to get your deal up if you want to get a deal up. If you want to invest, it's also a very straightforward process. Literally, it's the same way in which you would, buy any kind of e-commerce. You would go in, you would decide that you want to buy it, you put it in a cart, you check out, pay for it, and you're done. Obviously, it's not consummated, so to speak, until the actual deal closes, and then the money gets going from escrow to the issuer or to buy the property. And at that point, you've now purchased the securities. So for all that time, while the raise is still going on, that money sits in escrow. You actually end up purchasing the securities at the time when the deal closes and the money goes from escrow to the issuer. That's when you now have bought the securities. So there's a few steps here. Step one is you like the deal, you decide to invest in it, right? Then you wire or ACH the money into escrow. Now it's sitting in escrow on behalf of you and the issuer. It hasn't yet been invested. Then when it closes, you have up to 48 hours before it closes to ask for that money back. And then once 48 hours happens, you can't get your money back anymore. At that point now, it's like locked in. The money will then be transferred out of escrow to wherever the issuer needs the money to go to. You will know where that is because whoever the issuer is would have told you where the money is going to, and we will only release that money. So we have as the funding portal, we are the arbiter of whether the money can be released and to who. So we make sure that the money is not released to the issuer for them to go on vacation or to go and have fun or to go and buy their penthouse in the Bahamas. Instead, we make sure that that money is going to wherever they told investors it's going to go to. That's where we release it to. So if they told you that they're going on to buy a penthouse in the Bahamas with it, and you agreed to put the money in escrow for that, then we will release it for that. But generally, that's not the case. We make sure we do our due diligence to make sure the money goes to where the money's supposed to go to. And at that point, you're invested in the deal, or you've made the investment. So that's how that works. If you're an investor, if you are and similar, if you're the issuer in a similar kind of way, you wait until it closes. So that is really, really what it is. Let's see, we have a case study here of someone who also figured, this guy QC Capital, again, that closed just very recently. It closed not in the sense that they actually pulled out of the deal, but they raised nearly $1 million, and then they decided they didn't want to continue with that deal. So they actually pulled out of the deal, but they decided they wanted to see, are there enough people with their IRAs or 401ks who would invest in a deal like this? And they found that there were. So there's such a thing called a test the water part of it, which you'll find coming soon deals on our platform. And those are people who decided they would like to see whether there's an appetite for their deal. That costs nothing. You can do that for free. You can decide, is there an appetite for my deal? Go up on InVound, seek financing, and then you can go and put up a deal and then send it on Facebook and see, does anyone like this deal or not? He found that there were people who were willing to put in $50,000 at a time. So he went live and he found that he was able to raise nearly $1 million, relatively quickly. It took him 2 or 3 weeks. So it worked for him. So
We've got a couple of questions that are here, and Millie's been diligently answering them in the chat. So if you haven't seen the chat, make sure you check that out. But Don here has a question that maybe you could speak to, Levy. Can you talk about the typical background of a sponsor on the platform? Are there key deal aspects or sponsor aspects you review for in order to approve a deal that appears on the platform?
It's a great question. We try not to discriminate based on, so unlike some other platforms, right, where they put their reputation on the line for the deal, we try not to discriminate against people because, so for example, if you go with Realty Mogul, they will only accept probably around 3 or 4% of the deals which are suggested to put on the platform. And the reason for that is because they really are kind of standing behind the deal. They're saying this is a good deal to their investors, and it's really their investors. We're really a facilitator. So I'll give you an example of a deal which is coming pretty soon. They're brand new sponsors. They've never done a deal before. These are guys who've never bought a piece of, a piece of commercial real estate before. They are people who are very deeply entrenched in a certain community where they live. And there's a piece of real estate which is very, very well known in the community. And it has a, they want to do things for the community with this piece of real estate. Now, a traditional fund portal like Realty Mogul would never even look at them. Whereas people like us, we say, well, you have a piece of real estate, it's a real estate deal. It's community interest. That means you have enough people in the community who would be interested in investing in this, and you have that credibility within the community. We'll help you facilitate that raise. So that's an example of someone who would come to us and we would help them facilitate that raise because they come with them with credibility in which they can now go to people in the community, and those people will invest alongside them because they might not be real estate moguls, but they are people with credibility in the community and could get investors to invest alongside them. So that would be an example of a, but then you have people like Chris Salerno, for example, he's a sponsor. The guy's done, hundreds of millions of dollars worth of deals. That's another guy who would raise money on the platform. So part of our ethos is to help anyone get into real estate. So if you're a person who wants to do your first deal, we're not going to say, well, I'm sorry, you need to go and do 5 or 6 other deals first. We would help you facilitate that raise even for your first deal. So there's no, the thing which would disqualify you is if we thought something fishy was going on. And if it seemed pretty clear that you're going to lose, either it seemed that you're going to lose money for investors, right? Because or something fishy was going on, we would politely decline.
All right, no other questions at the moment.
Okay, so this is the fees, but I think that if you're not a sponsor, these fees won't interest you as much. One of the things which I would say though is what we're trying to do here is we're just pivoting a little bit in the way we do fees. So typically the way crowdfunding portals do fees is that they charge a cost of capital, which means that if you raise, let's say on WeFund or Start Engine or Republic, they'll usually charge you between 6 and 8% of the money which you raise. And sometimes some of it will be 2% of it will be in, they'll want some of the equity. There's different ways in which they structure it, but they basically, if you raise $100,000, right, they're going to want 8,000 of it. If you raise $1 million, they're going to want $80,000, somewhere around there. And that's how we also structured it for a while. Our fees were lower; they were like topped at 5%, but it would still be $50,000 on $1 million, right? And there's a 2% fee, by the way, which investors pay. So investors also pay like a platform fee of 2%. So it would still be $70,000 overall on $1 million. The way we're trying to change this is that we're trying to make it a little bit of a, if you want it, you can pay upfront some. What that means is if you pay a subscription over the course of a year, we'll bring down your cost of capital substantially. And if you think about it this way, it's right, we need to get paid because it costs us money to run a portal. It's not free. There's technology. Everyone needs to get paid. So if we're going to wait till the end of the race, whether you're successful or not, then you're going to need more. You're going to need to pay more. And that's typically the way most funding portals work. What we're trying to change it is like, if you pay us along the way with a subscription, then we can actually now at that point, we can now say we don't need to charge you as much because we've lowered our risk in a sense. So it'll be cheaper for you, but you're going to give us some money along the way. So we're able to pay our bills as we go. And therefore we don't have to charge you as much on the back end as the cost of capital. So that way you get a bit of a win-win. If you know you can raise the money and you know you're going to do this and you just don't want to pay as much cost of capital, then it's be better for you to subscribe. So we haven't gone away entirely from the cost of capital model because you can still do that if you want, 5% cost of capital. But if you want to and you subscribe and you're going to pay a monthly fee, then your cost of capital will go down dramatically. So that becomes a lot more cost effective for sponsors who know that they have an audience from which they can raise. So, Millie, have I missed anything in this presentation, do you think? I put you on the spot.
No, I don't think so.
Yeah, I'll ask a question. Since the majority of people here are investors, how do they get started on your platform? Is it just you sign up and they can go browse, or is there more to it than that?
Yeah. So the nice thing is at this point is that we have about 5 deals. We definitely have 5 deals, but perhaps 6 deals, and some of them are pretty good. I'm not, and no investing advice, but they're good. They're deals with good sponsors, right? Some of them are deals with really good sponsors, which are coming up pretty soon on the platform. So if you sign up, if you go to InVound.com and you sign up on the platform, you will then get notified when there's a new deal. So right now there is 1 deal up there, but literally in the past week, we've signed 4 new sponsors. And there's another one which we signed previously, which is like in the final kind of stages of going live. And one of them is a company called, the next one which will go live is a company called Terra Capital. And Terra, do you know Terra?
I do, yeah.
Yeah, so they're going to be raising, and usually their minimum is quite high. For example, Barbara Corcoran is one of their. You heard of Barbara Corcoran? She's from Shark Tank. She's one of the LPs. They're going to have a minimum of $5,000. You can actually get in on their deals for $5,000, which is on InVound, which I think is a good thing. We have some others which I can't talk about yet but one of the things, we have a 506c coming up. The distillery is going to be up pretty soon. So that's a 506c. If you're accredited and you want to invest in whiskey, that will be coming up soon as well. We have an interesting one, which is like a hybrid between a company and real estate, which is a French fries company. So it's InVound.com. Let's put it in. You want to put it in the chat? Let's put it in the chat. InVound.com.
I have another question, and of course, if anybody in the group here has questions, feel free to put them in the chat. But you mentioned it's not just real estate; it's also other potential investment or investment opportunities. So can you jog our imagination? What other types of opportunities are we talking? Investing in ATMs, or Colombian farmland, or patent royalty revenues? What are we talking about?
Yeah, all of the above. If ATMs, we would have to look at that. We'd have to do a serious underwriting there, because when I've looked at it, it seemed to me like it didn't add up fully to me when I looked at it last. So these are kind of deals we would have to look at and make sure that we would have to feel really comfortable that they're 100% kosher. So as long as we feel a lot of these, as long as we felt comfortable it's 100% kosher, it could be all of the above. Right. So, ATMs seem to be very, very popular. Right. So if we had an ATM deal which seemed to be legit, then yeah, no problem. But there's a lot of cash flow. Think about all these different smaller businesses which exist, where you have someone actually working in the business and they throw off cash, right? There's one of the reasons why I make a differentiation between cash flowing businesses and startup businesses, right? Because you've got startup businesses, they don't really cash flow for many, many years. They don't cash flow. InVound, for example, we're a startup. We've been around for 3 years and we haven't cash flowed yet, really, because now we will and we'll start to, but you've got quite a bit of time when, you know, there's a potential for product market fit happening or not happening, etc., all that kind of thing. So it's really much higher risk. That's not what we're going after. We're trying to be, if you're a business which is relatively boring, but cash flows quite well, so you're the kind of person who wants to invest in businesses, not high risk necessarily. But of course, they're all speculative, right? So let's be clear. Any alternative investment, according to the SEC, is highly speculative. But there's like, within that, there are the kinds of businesses which will probably never cash flow. You expect an exit with an IPO, right? Those are the kind of startups. That's not the kind of businesses that we're going after. It's more real estate-esque type businesses.
Okay. So if I were to give an example that isn't a real estate-esque, let's just say I've got a great cash flowing HVAC company, right?
Yeah.
It's cash flowing and I want to expand my operations by buying some new equipment and doing some things like that. Would that be the sort of, if I'm a small business owner who's already cash flowing and I want to expand?
Yeah. I'll give you another example, car washes, right? That's another cash flowing type business. It's real estate-esque, right? But it's a car wash. Or, you know, laundromats. If you got a whole bunch of laundromats, these are another one which is really interesting, because a friend of mine used to buy radio and TV stations. These are cash flowing assets. They're not real estate, but they're cash flowing assets. So these are the types of deals and the kind of businesses which we would be looking at and saying, hey, this is another way in which these kind of businesses can raise money. They throw off cash, and then, you know, people can invest in those. Again, you know, maybe 7, 8, 10%, you know, returns. Yeah, relatively boring, but nice and steady, and people can kind of grow their wealth that way.
We also have a lot of interest from RV parks, camping, you know, campsites, glamping sites, those kind of places that are not very heavy on the real estate front, but they may have some kind of central facility, but really it's about the land and it's about the business that's actually behind it. And they produce some very impressive returns as well, or can do.
Happy campers.
Oh yeah, Happy Camper, you know Don?
He's been here too.
Yeah. So we're talking to him. Don's really interested. So there's all these different types of businesses which, you know, they're not super sexy necessarily.
Hey, and let me ask the audience here again. Oh, we've got a couple more questions that I didn't see yet. At the beginning, somebody asked for the link to the internal SharePoint at Intel, and I'm currently not on the Intel network. If somebody can grab that link and put it into the chat, I know a lot of people would appreciate it. That way you can go back and see Don or the Hubbards or hard money lending or some of the other topics we've had before in the past. Okay, so Gary Kipp, what's the website?
Yeah,
is that
it's made up of the words invest and own. I wanted to see if ChatGPT could figure that out. I asked it, like, what do you think the name InVound is made of? And it came up right away, invest and own.
Very good. Let's see. Do you have any deals that accept 1031 money or opportunity zone type deals?
We do have opportunity. We've spoken to guys with opportunity zones, but the 1031, that's a question for your accountant.
I'll actually insert a question here. How long have you guys been FINRA registered? That was a fairly recent development, if I remember correctly.
No, it's been over a year now.
Okay. Okay.
Yeah.
Okay. Let's see. Thai is asking, any experiences with deals that did not go well? Any stories to share there?
Yes. Well, not deals which went full cycle didn't go well, but deals which just didn't fund. Our very first deal, it didn't reach its minimum, and I wanted a huge amount from that. So, you know, yeah, as every startup happens, you know, you just don't. Things just, you know, you learn from every single thing we do. We're learning from. So, but we haven't had any deals which went full cycle or anything and went south or anything like that.
I just noticed the time. We're at time actually. So if you're interested in getting in touch with them, it's InVound. Perhaps can you just give your contact information so that people can reach out to you?
Yeah, please do. And I'd be more than happy to. Let me put down my calendar.com/InVound. So if you want to make some time with me, I'm more than happy to. I'd welcome any kind of conversation you want. Calendar.com/InVound. It's really easy. Calendar.com/InVound. I could let me put my cell phone number here.
All right. And for those of you who are still on the line, we had a few drop off, I guess, with 1 o'clock meetings. But can you take yourselves off of mute and thank Levy and Millie for coming in and talking to us today?
Thank you.
Thank you.
Thank you.
very
Thank
much.
Thank you.
That was a great
Yeah,
update.
Yeah, thank
Thanks
you.
for this,
a lot.
folks.
Appreciate it.
Thank you.
Real pleasure.
Thank you so much for coming in. And
Daniel, I know when I messaged you yesterday, I know that the meetings are going out external, but are the recordings all still going to be on the Intel SharePoint, or is the group also moving external?
so we're moving all of our videos to alternativeinvestingclub.com, and we have a YouTube and a Rumble channel as well.
Alternative investing.
The
Awesome.
website is
That's great
currently
news,
not.
Daniel.
Yeah, the website is currently not there. I actually have
okay.
it on a dev staging server right now, and it'll be there shortly. I had a
Okay.
deployment issue. I got to fix that. All right. Have a wonderful day.
Today's your last day.
Nice.
So,
Today is my last day at Intel. Thank you, everyone.
thank you. Yeah.
But we'll be
Daniel,
back.
wishing you all the best. Yeah.
Good luck with the exit, Daniel.
Thank you.
Yeah, wish you all the best, Daniel.
Yeah, Daniel, make money for yourself and for us.
Yes, sir.
All right.
We will be back next Friday. And actually, you'll be hearing from Sean Denis and myself. So we hope you tune in then. Bye.
Thank you, Daniel.
Thank you very much for having us.
Thank you.
Thank you.
Thanks, Levy. Thanks, Daniel.
Love the music there.